I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a brand new guest. You may recognize his site. It's tfmetalsreport.com. You also, I'm sure, recognize his handle, Turd Ferguson. And my running joke with this guy is that you're too smart to be called Turd. His real name is Craig Hemke. He is the founder and the editor of TF Metals Report. Craig, thank you for joining us today on USAWatchdog.com.
Hey, Greg, it's my pleasure. I'm a big fan, and it's an honor to be on your program.
Well, an honor to have you on. You got a big site. You've kind of turned it into a pay site by design. You don't charge a lot, $10 a month or something like that. But, you've got 25 years experience in securities, wealth planning, Wall Street shenanigans going on. You started this back in 2009, and it's really blossomed into a heck of a site. You are still giving your analysis on your report and in interviews and things like that. You pretty much cover everything if you're going to manage people's wealth and tell them what to do.
Yeah, the theme of the site, the motto, if you will, has always been that we are preparing for the end of the great Keynesian experiment. And that implies that we're all in the same boat. You, me, everybody watching, us right now. We are all in the same boat. The Keynesian experiment means this idea that government can just simply print money, go into greater and greater debt, increase the money supply year over year. And we're at a point where that's at its terminal phase, where everything is growing exponentially, and you just can't simply have it continue. It is unsustainable on this trajectory. And we're all in that same boat, and we're trying to prepare for what's going to happen next.
Well, let's talk about what's accelerating it, and let's start in the Ukraine, where we finally last week got metal-on-metal contact with a partial attack, and now we're looking like this is going to turn into a full-blown war between Russia and Ukraine, and I guess that would mean NATO, even though we don't have a deal with they're not a NATO country. How do you think this is going to accelerate the world spinning downwardly faster?
Yeah, there are so many angles to this, Greg, that are not being discussed in the U.S. media and the Western media. This is not just simply about protecting the Kiev government, and bringing them into NATO and all that stuff. First and foremost, it's about protecting the hegemony of the U.S. dollar as world reserve currency status, because Russia, and by extension the Chinese, the Indians, the Brazilians, the South Africans, all of those creditor nations are moving toward what will be the currency paradigm, the global financial structure of the 21st century. The U.S. dollar was what it was in the 20th century, and here into the early years of the 21st. We're doing everything we can to defend that. What I really question is the motive of the U.S. for pushing Russia into this conflict. And what people need to understand is that the relationship between Russia and Ukraine goes back centuries. They share family relationships. They share ethnicity. They share, in large part, a common language, especially in the East. Vladimir Putin was never going to be the Russian leader that, quote unquote, lost Ukraine. This is, in great part, an existential threat, not only to him, but to Mother Russia. They were not going to let this just unfold. They weren't going to let NATO come all the way up and take over Ukraine. The fact that last week we started to see an actual hot war begin to develop, it's not surprising. It's been going down that road since February, and it's only going to get worse from here.
And what about these sanctions? We've already had a financial war going on. I have some of my guests talk about a financial Cold War. I think Peter Schiff brought that up. I know you do a lot of analysis as well. And what about these sanctions that apparently are hurting already the U.S., the EU, Finland's laying off workers. There a bunch of fruit and vegetables is backing up in Spain. Poland's lost a 0.5%, 0.6% of GDP. That's just the beginning of the nastiness. And Europe can't take the hit, can they?
No, and that's what has been the folly of this ever since February, when it really got rolling. Is that the U.S., either the U.S. government, whether it's the Obama administration, the State Department, whatever, falsely believes or somehow naively believes that we hold the cards in this. That we are this big economic and global military superpower, and so we can just push around anybody that we want. When in fact, it is the Russians, and by extension their allies, who in fact really do hold the cards, because they are our creditors. Should Russia decide because ultimately they're going to, Russia, China, this partnership decide to offer an alternative currency, an alternative global reserve currency to the U.S. dollar, when that happens, it's going to be economic mayhem for the U.S. and the West. By pushing this issue in Ukraine, we're just simply speeding up that process. Now, whether we're deliberately speeding it up to create a boogeyman that they can blame it all on, I don't know. I mean, certainly that's a possibility. But we, like I said, naively believe, our leaders naively believe that we hold the cards, and we don't hold any cards in this. And that has been, again, the folly all along of this policy that we followed for the last 6 months.
I brought up Ferguson, Missouri, and I didn't bring it up on the basis of whether or not, terrible thing, kid got shot.
Right.
He's apparently unarmed. It's pretty widely reported. I don't know why that happened, but Ferguson, the looting, the rioting, do you think that we already have people at the bottom end of the social spectrum, which I brought up, that, they're already paying high prices at grocery stores. They're already being squeezed. There's already the Obama administration, the Democrats, and I'm not a Republican, but their plan is to raise the minimum wage. That's their economic plan. And
Right.
Whoa, what happens when the dollar is no longer the world reserve currency? Do we have, Ferguson on steroids all over America, whether you're white, black, Hispanic, Asian, whatever? All over, and multiracial craziness.
The short answer is yes. That's exactly what I fear, is that type of civil unrest. Why? Look at, we'll go back to the situation in New Orleans with Katrina years ago as an example. Psychologists have done plenty of studies that show, in the first 24 hours after some type of disaster, everybody gets along pretty well, and there's hope, and they'll be coming to help us and that kind of thing. And then after 48 hours, people, society starts to unravel a bit, and then after 3 days, and it's just full on anarchy. That, I fear, ultimately is the direction that we're headed. We've been able to control, if you will, inflation, mitigate it some. It's not 2% like the Bureau of Labor Statistics wants you to believe. It's really closer to about 10 in the essential items that are all dollar-based, whether it's milk, gasoline, bread, food, rent, college education, health care, all that stuff. It's not affecting those at the absolute top of the food chain. That kind of mysterious 1% that often gets talked about. Not only is it the lower income folks, the bottom 20%, it's the whole middle income, the whole middle class that is getting squeezed, that's trying to support their family, save for retirement, try to get their kids through college, all this kind of stuff on $50,000 a year, or whatever the median income has fallen to in the last couple of years. And they're just getting squeezed more and more as the U.S. finally loses its reserve currency status, which is an eventuality. All these extra dollars that have been printed, especially in the last 5 years, but over the last 40 years, will come washing back to our shores. I don't know if it'll be hyperinflation, but it will be significant inflation. It'll get to the point where people just simply can't feed their families anymore. And it is there that I talked about. That's where you get, it's 3 days on the roof and society starts to break down. That's what I fear, is that level of civil unrest. And what comes after that? I'm not certain.
Well, I want to talk about some of the things, the shenanigans they're doing to prop this up. It's taken a while.
Right.
This is one of the reasons why I interviewed you. Is you really explained what was going on with JPMorgan, the CFTC. How could they not know there's manipulation? They're fining JPMorgan, a slap on the wrist out of $600,000. Explain why they are manipulating the metals. I'm not even going to say, do you think they? No, they are. They're manipulating the metals. And we're all adults here, where they are manipulating the metals.
Right.
Why? What's the point of them doing what they're doing and looking the other way and making these stupid fines with JPMorgan for what amounts to fraud?
Well, in the end, at this point, all markets are manipulated to some extent to create an illusion of health and wealth. That all is well, that we are recovering, that the banks have healthy balance sheets. And all of that is nothing could be further from the truth. But the Fed prints a lot of money. The primary dealer banks of the Fed pump it into derivative products like S&P futures and ETFs and the VIX, which is the volatility index, all kinds of things to drive the market higher. And if you look at a chart of the last 3 years, the stock market's done nothing but go straight up. Not based on fundamentals or anything else. It's just simply based on all this free money that's been shoved into it to create this illusion that all is well and keep the Ponzi scheme going. Part of that illusion creation, how's that sound? Part of that illusion creation is managing the prices of gold and silver. And you might think, oh, Craig, what are you talking about? I mean, gold's gone up for, between 2002 and 2012. It went up from $250 to $1,950. Yes, that's right. That was kind of a managed retreat. But gold as sound money, universally accepted for millennia sound money, is the antithesis. It is the enemy of paper money. And paper money is what runs the U.S. economy, the U.S. government, all of the Western. So the central banks work together to loan out, lease out their gold to suppress price in the futures market. The history it's there for anybody that is willing to look. Gold manipulation is not a conspiracy theory like, we're looking for guys up on the grassy knoll someplace. No, it is historical fact for anyone that just simply wants to do their homework. So you mentioned people that think that it's a conspiracy theory. Well, those folks are either just naive or they're trying to pull a fast one and purposely misinform people.
I think all the evidence is there. I mean, just the latest thing about JPMorgan. Talk about that. The $600,000 fine, which is, to you and me, it may be a lot of money. It would put me in bankruptcy. But for JPMorgan's like, do I have any change?
Right.
Yeah.
Right. Within the futures industry, the government watchdog, if you will, is the CFTC, the Commodity Futures Trading Commission. This is a entirely co-opted and corrupt organization. It is run by political appointees and bureaucrats who are, frankly, I think they're criminally co-conspiring with the big banks and by extension the Federal Reserve to allow this manipulation, to allow this suppression of gold so it's not an alternative to the paper money, which is now, as everyone knows, being printed with no end in sight. The CFTC, instead of being the watchdog, instead of being the policeman, just simply rubber stamps and looks the other way. What you're referring to is a fine that the CFTC gave to JPMorgan about 2 weeks ago. It was a whopping $650,000. And what JPMorgan's crime was falsely providing inaccurate data to the CFTC for the reports that the CFTC generates on either a weekly or monthly basis. Other market participants rely on this information. It's the only information we get to show what's happening internally with some of the big players in the market and their positions. And JPMorgan was purposefully misleading folks by providing inaccurate information. This cost traders, investors, people that just own metal billions of dollars, frankly, because you can't even count how much money this might have cost. But instead, what does JPMorgan get? They get a slap on the wrist. CFTC even said that throughout the course of 2013, this happened, in their words, hundreds of times. This is simply just more evidence that the CFTC is, like I said, I consider them a criminal co-conspirator with the big banks, especially JPMorgan, in this ongoing manipulation scheme. It's not going to end anytime soon. It's going to end when finally there isn't enough physical metal left anywhere in the West to cover all of these paper contracts that have been issued. I wish it would happen tomorrow. It's not going to happen tomorrow, but it will happen eventually. And in the meantime, we just have to take advantage of the lower prices that are given to us by this suppression scheme and add to our own personal protection stacks.
There are some new numbers out from the Mint that sales of gold eagles and silver eagles have fallen off pretty considerably. What do you think about that? Why do you think that's happening? Or do you think that's more fake information? I don't know.
I don't know if it's fake information, but the Mint has such odd practices anyway. I mean, it's a government bureaucracy. So when there are huge levels of demand, rather than meeting that demand and getting the metal and bringing that metal into their Mint facilities and getting as much metal as they can to meet the demand. No, they'll instead put a quota out and a cap on what they can produce.
So you're saying the sales have fallen off because their supplies are tight and they're not printing as many coins or minting?
No. When they could have been selling 10 million a month, they say, well, supplies are tight and we can't supply 10 million. We can only do 5. And so now that sales are down, I don't know if that's indicative of, as price of silver wasn't necessarily rallying all through the first part of this year when sales were at a record level. I mean, that's such a tiny fraction of global silver demand that I don't know if I put a lot of stock into, I don't put a lot of weight into what's going on there.
Well, and that's just being as you are the TF Metals Report man. And Craig, what are you thinking about what's going on in the metals right now? Do you think we're going to have another cliff dive going down, or do you think we're building a bottom here? I mean, we have all this hot war action going on over in Ukraine now, and nothing's settled down in the Middle East, whether it be from ISIS, Iraq, Israel, Gaza, Ukraine, the Chinese over in the out there in the South China Sea. What they're doing out there. I mean, there's wars and rumors of wars everywhere. What do you think about the price of gold building right here? Is it going up from here or down from here?
Well, do we have a couple hours to talk about this?
Well, we got a few minutes. How about that?
I could go on and on about that. It is. Let's just I'll try to make this as concise as possible. When price was smashed in 2013, it was done so. It was counterintuitive. It surprised everybody. There's a long history of the growth of the Fed balance sheet. You can plot that with gold. Overlay the U.S. national debt, and they all rise together. But beginning in October of 2012, when QE to infinity was announced, all of a sudden gold diverged and went down. This was a deliberate scheme of metal supplied by the central banks to the bullion banks like JPMorgan, who dump it on the market in paper derivative contracts, and down goes price. When they did that, global demand just went through the roof and eventually put a floor under price at about $1,200 back in April and May of last year. We then rallied and then came back. And at the end of last year, went back down. I'm the only person that I know of that was actively calling it a double bottom last December, not a move to new lows. There are still people that think we're going to go new lows now. They're dead wrong. That double bottom is being recognized now by other folks as being, that's actually the case. Throughout this year, an effort has been made to keep price tamped down and below what is a pretty clear trend line that we draw in technical analysis on the charts. Multiple efforts were made to suppress price below there. The reason being is that it was reported to us last fall that the vaults of London, where all the Western tradable gold is held, are all empty. Ken Hoffman of Bloomberg was on Bloomberg television back in December informing us 26 million ounces, all gone. Well, if that gold isn't there, it becomes extremely important to the banks with all of their derivative obligations to keep price down, because in the West, we buy more of things if price is going up. So all year long, this has been about managing price, keeping it down, especially below that trend line that I mentioned. Well, we finally broke through the trend line back in the middle of June. And the banks have been adding fresh shorts. They've added about 400 metric tons of paper gold, naked shorts, to the market in just the last 2 months, trying to keep price down, because again, since it has turned, it's going to start generating its own kind of virtuous cycle, its own bullish momentum. It's going higher. There's no doubt in my mind.
When does this blow up? When does this blow up? Because how can they keep doing this? At some point, they got to lose control. They appear to be in the process of losing control, because they didn't gain control by what they did. So when does this blow up?
The biggest concern that these banks are sitting on, literally, maybe more than $1 trillion, at least billions and billions, hundreds of billions of dollars of derivative contracts based on keeping the price of gold down. They could do that they have done it now ever since COMEX started trading paper metal futures back in the mid-'70s. So they've done it now for almost 40 years. But there has to be a connection to physical metal. You can't just, Greg, you and I can't create our own futures market and just start trading paper metals markets without metal behind it. There has to be some link to physical metal, and it is that physical metal that is disappearing. People have read reports. I'm sure most folks have seen this by now. The amount of gold that is flowing from west to east as China rapidly accumulates it because they're probably going to use it to back their currency at some point in the near future. Once that gold is gone, or even close to being gone, then there is not enough gold left to back all of these futures contracts in the West. That's when the game finally ends.
When do you think that is?
Yesterday, anytime. It's one of those things where I don't want to put a date on it and say it's going to happen by this certain date, because then if it doesn't happen by that date, people say, well, then that guy must not be right. These banks have the ability to keep this Ponzi going, not indefinitely, but a lot longer than you and I can probably expect them to. I would never have thought that they could have lasted this long after the collapse of 2008, but they have. It is coming, though. If those reports are correct, and there's no reason to think that they're not, the vaults of London are empty. The Germans asked for 700 metric tons of gold back from New York last fall. They got a total of 5 metric tons. There are all kinds of indications that there's hardly any Western gold left. There's certainly not Western gold left with clear title. There are multiple owners to the same bar. This whole thing is going to blow up. Just like the entire Western, monetary system that's based on debt is unsustainable. This global fractional bullion banking is also unsustainable. It's going to blow up too. When the key thing to watch, like I said earlier, will be a return of price momentum to the upside. Because that's why they've tried so hard to keep it down this year. Because if you can keep sentiment down by keeping price down, then there's really no physical demand, as you mentioned earlier with the mint sales. What Americans and people in the West want is they want to see a rising price. They'll buy stuff if it's going up. If it's going down, they want nothing to do with it. So it's very important that they keep sentiment and momentum down, which is why they're working so hard to do that this year. That's like pressing on a spring. That's like trying to hold a beach ball underwater. Eventually that's going to fail, and as it fails, it will begin to accelerate to the upside.
Craig Hemke, TFMetalsReport.com. Craig, thank you for joining us today on USA Watchdog. Really appreciate you having you on. We'll have you back, my friend.
Greg, it's my pleasure. Anytime.